What up with the wheelhouse, guys? My name is Chris. This is Wheelhouse Trading, and welcome to the wheelhouse. So it has been an exciting week. We've had ups, we've had downs. As you guys know, I am a directional trader. When it goes up, I go up. When it goes down, I go down. I make a lot of trades every day, all day long. This market is working very, very well for me. Doing intraday trades up and down, and my system is definitely paying off really well. If you guys are not in the Discord, I'm going to put the link in the description. Just click the link and you can come in there for free and you can meet people. I'm helping people out with plays even when they're not upgraded. A little bit in the morning with some things to look out for, and talking to everybody. But you can upgrade and you can do all the courses. In fact, the next courses that I'm uploading are going to be some really cool hacks. Like for instance, one of the things that I do is I create a watch list for everything that's going to have the earnings week, and then when one of them is going to pop at the earnings, and I'm going to have my finger on the button. So, as an example, Microsoft, I had over here. I put in Microsoft, and I put a limit order in 200 shares and extended hours. And as soon as it came out, and I saw that first major candle, I sold 200 shares short, and I was up a lot of money really quick. And then I went and I bought to cover, and I was made a bunch of money. I did that on Snow one day as well. I also did it on Nike. And these are like $2,000 in like 1 minute kind of plays. Like sometimes they're pretty good. They could be $500, they could be $3,000. It just depends on the momentum. But I organize the list, and I'm ready to go because they're not all going to go way up, but there's usually going to be one of them. That's just one thing. I'm doing courses on hedging. I'm getting to a point where I'm making money really fast right now and every day. Because, again, I'm not overly worried about the news, although there is some news I need to talk about right now on Bloomberg. U.S. government warns of Russian cyber attack, and also it looks like they're, what's the word? Not mounting or moving, but I guess they're organizing troops, 8,500 U.S. troops right now. God, I don't like hearing that. I'm a little older. I remember, when I was younger, I still lived with my parents at the time, and back then you could literally watch the entire war in Afghanistan on CNN. I also remember the morning very well of September 11th, and me, like most other people, are traumatized from that. It actually makes me emotional immediately thinking of that. But yeah, I mean, God, I hope we don't go into a war with U.S. soldiers after we just pulled out U.S. soldiers. Jesus, man. God, that's not good. Well, we'll see what happens, okay? Now, what I wanted to talk to you guys about is, as you know, if you're new to the channel, make sure you subscribe and select all, because I'm here to just kind of hook you guys up, give you pro tips. I'm a professional trader. I've almost doubled my money this year, and it's January. We're not even at the end of January. Like I'm sick with it. Now I am doing highly advanced intraday trading right now, with a whole bunch of pro kind of things that I do. But normally, just so you know, I don't just intraday trade. I just have a tool chest of a ton of tools, and I can work any market, even a crazy market like this. It's not for everybody. It's not easy, okay? I've been in the market a long, long time, okay? This is not my first rodeo. In fact, I have a degree in this, and I've been in the stock market for a long time, the crypto market now for a while. Not as long as some people, like 2013, but for years. And I love trading, but I love swing trading. I like, if it's a great bull market, I'll position. I'll run the whole thing, from the beginning of the blue ribbon to the end. I'll run this whole deal, boom, the whole deal, and I'll just stay in. I'll just move my stops up. So don't think that I only trade. I just know how to do all of them, and what I do is I choose my system based on the temperament of the market environment. I also choose my time frame and different tools and systems and styles depending on like what's going on in the market environment. All the news shows up in the charts. I'm trained to understand the charts really well, and I can see stuff brewing in the charts before it even hits the wire sometimes on the news, and that's very, very helpful skill for me. And that is something that I teach you. I teach you so much in these courses, guys. You really should get in. It's $99 a month. You get the Wheelhouse Wednesday group training. I go hard in the paint in those group trainings. I break it down like straight up matrix. You guys should just listen to like one of them and listen to the people in there talking. They're just like tripping. They're blown away at the stuff I teach them. Then you get the one-on-one coaching with me. Which actually I'm supposed to be in one right now, but the student flaked, so I got out of there. I'm going to make a video, get it, kind of moving for tomorrow morning, which will be this morning for you. And so look, Fed meeting is today. This is what I do on these days, and this is why the last time there was one I made so much money. I showed you how I made that. It was $59,000 in about an hour. And so what I do is I have a plan, okay? And this is something I'll do for the rest of my life, because when you're in the market for a very long time, you know what works and you know what doesn't work. You know who you are. Are you an intraday VWAP trader? Are you searching for low float? Are you a breakout trader? You're going to know who you are. You're going to know how to size up. You're going to know how to scale in. You're going to know how to scale out. You're going to know how to read this stuff really well when you get years and years and years and years into this thing. So I know who I am, and I know what works, and I know what doesn't work, because I have lost money in the stock market just like I make money in the stock market. And just so you know, even though I make money pretty much every day, and yes, it's been every day of January, you got to understand, I'm losing trades every day too. I'm just winning more trades, and I have a system where the position size or the dollar amount is pretty similar, and that's I win more than I lose, and so therefore by the end of the day, it's even if I lost 20 grand and I made 60, well, I had a net of 40 as an example. Although today and yesterday I did more than that. So, look, this is what I suggest. You have a plan, okay, going into tomorrow, or today for you guys, sorry. What you do is you have a watch list of shorts. Now, what I like to do is I like to make sure, let's just go, like, I'll give you a couple examples as an idea, just as an idea. Okay, so, like, what I like to do is I like to find stuff that is bearish on the daily, okay? So, you're in a downtrend. You have lower highs, okay, on the daily, okay? You got to always start everything on the daily, all right? So you got your lower highs, that's a bearish sign, right? And then you made your red cloud, that's this back here, and you're in the red ribbon, and as I mentioned on the daily, it's not easy to get in a red ribbon. Well, you fell below the 200. That's bad, and you have a previous support over here that you've also broken through recently. So I know we're in a downtrend, and I know we have everything going for us except the 250 haven't crossed, but it looks like they're about to soon. This is called JPOW, okay? And I actually did short this, and I actually went pretty heavy on this, and I ended up being a pretty lucrative trade. I made an announcement in the Jedi chat area about it, that I went heavy on a JPOW short towards the end of the day. I also shorted this one, FTNT. And anyways, we'll get back to JPOW, and it's all the charts are the same in the way I do it. So I'm looking for specific things. So what I recommend to you is you have a plan going into the Fed meeting. Okay, you have an idea if it becomes bearish. Now just know this: the market's going to be extreme either way. It's not just going to be flat and little flowers and everything's all happy. No, it's going to be violent and rambunctious and extreme, and that's just the way it is on the day the JPOW talks. I think it's way overblown. I don't believe that these companies, what the Fed does about interest rates has anything to do with the quality of a company. And yes, I believe the stock market will eventually go up. And no, I don't think we've hit a bottom. And yes, I think there's more pain to come. And, I know that because, I'm a student of finance and economics, and that's what I have degrees in. And, I love it as well. I also just, really like it. And I'm passionate about it. And for me, I love history, and not just like financial history. I just love all of history, like period pieces and civilizations. And I just like that stuff. I don't know, I'm a nerd, whatever. But I enjoy it. And, I also am very good with pattern recognition, and I study charts and I study things that go on, and I notice things that happen. And I've been through a lot of these Fed meetings. So once upon a time, this was in probably 2021. What are we in now? 2022. So, within a year ago, things started getting a little shaky, when JPOW was, they were starting to talk about, tapering, and this was like, the summer of 21, I think, and I just started noticing it by the time we got around to like August, September, that, the market became like incredibly erratic and extreme on these days. Most of the time, I noticed, it would go way down, okay? And some of the times, not as many, it would go way up, but it was always extreme, okay? And there's a flow to the day. There's the way that it starts off. There's usually like a whole bunch of trading leading up to it, and then it'll accelerate the trading, or it'll completely go the opposite way and fast and hard. So what I do is this. I prepare everything that I'm going to go short on and everything I'm going to go long on. And I actually don't trade until I see the minutes on all my screens. You can't see them all, but all the charts, and I see the direction of where we're going in the market, what the market sentiment is, what is the consensus, okay? But I'm prepared the night before. So as an example, what I'm going to do for shorts, as an example, is I'm going to find some that are making lower highs and they're bearish on the daily with the red ribbon under the 200. I'm going to verify that direction on the 4 hour. I'm going to verify it on the 1 hour. I'm even going to take a look at the 30, the 15, the 5, and the minute. And when you get something that has every time frame showing bearish signals, then that makes the list, okay? Another one that I've been killing it on, shorting and longing, I've been doing both, I've been going up and down on it, is NVIDIA. NVIDIA, and you guys got to understand, I love NVIDIA, I love Tesla, I love Microsoft, I love all these companies, but your biggest leaders going up are going to make you a lot of money on the way down if you know how to play them, okay? And, I teach you how to compound your money. Like some people are like, hey, you know what, all you got to do is hold Bitcoin. I agree with that statement, by the way. I think that, I might be a master trader at stocks and crypto as well, but I'll just straight up tell you, like with crypto, it would be a heck of a lot easier to not dance on razor blades, not, try to avoid booby traps and landmines, and just buy and hold and dollar cost average into that. If you love Bitcoin or Link or Avalanche or Solana or Cardano or whatever it is, Ethereum, which I love it. I love all those ones I just mentioned, by the way. That's why I mentioned them. But those are the ones I like, and there's a few more. But just you can dollar cost average into high conviction plays, and you can just hold those, and it's really good. You don't have to trade like me. I actually have a HODL portfolio outside of an exchange, and then I trade at these higher levels because some of my stuff is of much lower cost, So what I do is I prepare the list. Now here's NVIDIA. Doesn't it look the same as Datadog? Look. See the similarities? You're in a downtrend, red ribbon, red cloud under the 200. Go back to NVIDIA. Making lower highs, red cloud, red ribbon under the 200. Let's verify the 4 hour. Bearish. 1 hour, bearish. 30 minute, bearish. 15 minute, bearish. 5 minute, bearish. 1 minute, bearish. That makes the watch list. So I compile all these and I create a plan, okay? So when I see the consensus, which is never wrong in the market, by the way, the consensus will show up in the trend, the consensus will show up in the market. So whatever the market is thinking is going to show up on those minute chart candles, and I just will have everything prepared for shorts and longs. I'll have a long list and I'll have a short list. Long meaning green going up, short meaning red going down, okay? I'm a directional trader. I'm non-emotional about it. If I could prefer, I would prefer that it always went up and that I always went long, and I actually would prefer not to trade. Just so you guys know, I know it's called wheelhouse trading and I'm the owner, but I would prefer not to trade because I believe that trading just puts you at so much risk. I would rather just roll the trend and move my stops up and just have parameters and auto trade like killer fundamentals. And I will get back to that because I've seen a lot of markets. Not all markets are cut from the same cloth, excuse me. So you're going to see, turbulent, violent, market shifts. You're going to see nice, smooth, gentle, non-volatile. They're going to, go up 0.25%, 0.5%, that's kind of, it's nice, it's actually cool when it just barely moves, but it's moving up in a trend. That's good, guys. This is like revolver shotgun style. Like it's like playing Russian roulette. You don't know what you're going to get because you have revolutions going on inside of revolutions. It's rotations from sectors to indexes to divergences. It's just a lot going on, and you have to be pretty savvy to navigate this and trade this. So I actually don't recommend it for anybody unless you like take the courses and you do the one-on-one, and I can be there and kind of handhold you guys a little bit and help you guys out. Then that's different. But just jumping into a market like this for your first time, that would just be like financial suicide. You'd probably have to like have some serious luck on your side. And I'm not a lucky guy. I'm a smart guy. I guess I'm lucky when it really counts. I am lucky when it really, really counts. But this kind of stuff I'm never lucky with. I just have to be smart. And I have to have a system to keep myself in check. And I have to have rules to keep myself in check. Because I'm just like everybody else. Like I get excited. I get FOMO. I want to buy in on the top wick candle. And I don't want to sell. I want to do everything I'm not supposed to do too. Trust me, I'm a human. That's why I have to have these rules, and just keep myself in line. And that's why I just auto cut losses like short. Just if it's going the wrong way, I'm just boom, gone, cut, and I let my winners go, and I just run them. And that's how I do it. So. I don't know what's going to be looking good on the long list, but I want to give you another tip for the bearish list, the short one. So it's really good to like look at the time frames first and compile that on the list, but then make another filter for that short list. Look for things that are above that 20 price to earnings. So you find something at 58 or 37. Like I just took a short on Amazon. I shorted Microsoft. I mean, all these Melly's a good. Oh, I'll give you another tip actually. So I love these companies. These are all like great companies that I go long on. But when it's time to do it, it's time to do it. And look, there's your red cloud under the 200. You're breaking all these supports. I mean, Amazon is at over here. It says it's at 56 price to earnings. So yeah, knowing there's a value compression, knowing there's rate hikes. Could bring these things down. Now, inflation will bring the stock market and real estate market up, but any fear of rates hampering that down is going to lower and compress values. It's just the way it goes. It's normal, and all this stuff is kind of normal. I know it seems crazy to some people, but it's just kind of par for the course. I will say though, how do I say this? This is an especially erratic market through all the markets I've been through. That's the easiest way to say that, and it really is. I mean, I've seen some pretty wild things in the market, but this is like just there's a lot going on. This stuff I'm seeing right now on Bloomberg right now about mounting troops, 8,500 U.S. troops now, and cyber attacks, and I just hope we don't have to go through that. So yeah, it's about preparation, and so look, high PE. Then what you do is you go look at the 11 sectors and you see which one's getting hit the hardest. So you already have a whole bunch of them that qualify with the high PE and a whole bunch that qualify with the bearish tones on all the time frames. Then what you do is when the market chooses a direction, and let's say it's bearish tomorrow, or today for you guys, then what you do is you find the sector that's getting hit the hardest, and then you can select the one or two that's in your watch list that's in that sector. So let's say it's financial or energy or consumer staples or information tech or whatever it is, right? and then you hone in on that and you roll it hard. You put your foot on the pedal, because this is what I learned. Okay, days like, you know how people say, well, you got to always be in the market. You can't time the market. First of all, you can time the market. I do it every day. Excuse me. I do it every day. I time the market. But timing the market is also like a sound and solid, thing. So I'm not knocking that, because I do believe in that. And again, I actually would prefer not to be trading as crazy as I'm trading right now. I just know how. I'm a master at it. But I would rather like position or swing trade and do things a little bit more like take my time and let it run the trend and move those stops and really like focus on the fundamentals. And this is not a fundamentals market. This is basically like this is a trader's market. The volatility is crazy right now. So it won't always be this way. It's going to go back to normal. I just don't know when. I do think that, what was it, an average of 16% over the last secular bull, then we have to average 5.5 for the next 20 years to make the average of the S&P of 10.5. And that's not just like throwing out some numbers. That's true. And that is why people make 7 to 10%, because these cycles do this. They have these hot spots, and then they have these low kind of boring spots. And we're kind of probably entering into a low boring spot for a little while, and then it's going to make like another leg of a bull run. And that's just what's going to happen in the cycles. So yeah, you'll use your sectors. You'll have your list. You'll go for, you'll use everything to your advantage. Like, instead of worrying about the Fed, use it to your advantage. Instead of worrying about value compression on PE, use it to your advantage. Everything that's thrown at you, use to your advantage. Find a solution for every problem and become a winner at that. That's what I do. I take everything that's thrown at me that everybody's freaking out about, and at first I will freak out about it too, and then I'll figure out how to make it work. Algo trading was very hard for me to work with, but now I use algo trading to my advantage. And that's another thing I'm going to be teaching the Jedis, since I'm in the intermediate section. We'll finish the intermediate, then I'll get to the advanced, and I'm going to give people crazy hacks on like how to do a lot of stuff. But yeah, I mean, look, it doesn't matter what comes at us. Let's say we go into a recession. Okay, we have slowing growth, and I don't know if we'll go into a recession. A lot of things are pointing towards that we will, but it's not in my mind, and this is a field of study for me, it's not for sure in my mind that that's going to happen. A lot of it's going to have to do with like I've been saying in a lot of videos, like the economy. A lot of the trick to the stock market is understanding the economy. So like everywhere I go, people are trying to find employees for work, yet the jobs data is indicating that more people are at work. So I don't know if the jobs data is correct or not. And if it's not correct, we probably would go into a recession, because bear markets can come out of low employment, guys. Don't get me wrong on that. And but so it's hard, because I don't know how accurate the data is. I don't know. I just, I'm going to need more information, but there is a chance. There is certainly a chance. And we'll have to just see. And that's why I move my money to cash every night, even though everything in the charts tells me I could stay in and stay shorting on things or whatever it may be. But yeah, I mean, look, here's another one, AMD. AMD, I shorted it. I love AMD. I've been in it for years. But look, there's that red ribbon, red cloud, momentum under the 200. Remember, I was teaching you guys how to break out right here at 108. We took this thing. We ran it up. Now we're going to run it down. Well, I made good money on that too. And so, you just have to know the sector. Now, NVIDIA and AMD are the same sector, semiconductors. So, they're both way down in the after hours. So is semiconductors going to get hit tomorrow? Possibly. Well, what's the PE on it? 36. It's above 20. Take it into consideration. I'm giving you pro tips. Okay. Now I take it a step further and I run the leverage bear, the triple leverage with margin on the way down. But I don't recommend that unless you're like really, really good. I'm very fast and I know what I'm doing. So it might be different. I don't recommend, like I even try to teach people some of these hedging tactics and like how to use the triple leverage really fast, and they'd buy it and they'd hold, and I'm like, well, why are you holding? I'm like in and out of those, like, 5-6 times a day on each one of them. Like I'm riding up and down on the momentum. I'm scooping up cash on the way up, then scooping it down, because the way the market works is it's got to ebb and flow. You know what I mean? It's got to ebb and flow. It'll go up for a couple hours, it'll come down, it'll go up. And every few days it'll just go up and then crash at the end. Like you got to find the rhythm and the flow to these things, and so I don't want you guys just trying something because there's a lot of risk with that. But if you know what you're doing, great. And if you don't, like I'll teach you. Just come in the Discord and I'll totally teach you how to do that. And you could be making a lot of money too. I'm trying to get everybody to a point where they could be making like serious money. So. Yeah, I mean, if the market goes green, like for instance, let's say JPOW comes out and he says something like, we're going to do everything in our power to keep the economy growing and healthier and the markets flourishing. And I mean, immediately, it doesn't matter what stock and what chart you're looking at, everything is going to be a tidal wave of green, okay? It's going to go green, doesn't matter. So what you would do in that point is you would find all the ones that like people like then you'd move NVIDIA. Instead of going down, you take NVIDIA and you go up. You take Microsoft because people love that, and they're going to put it in there because they're like, oh my God, the market's going to be good. I want to get in. That's the bottom. I'm going to buy that dip. And, so that's how people are going to think. And you just need to, be able to pivot either way. Don't get caught up and emotional on the stock. Trust me, there's going to be a lot of videos that I make where I'm going to be talking about getting caught up and emotional on a stock and why it's fundamentally like the right play and, technically the right play. And believe me, there's going to be a lot of videos on that when the time is right, okay? Right now is not the right time because I think we're just going to, kind of have a little bit of turbulence, and we're going to have to trade this thing if we're going to be in it all. But if later, it's going to find a bottom, guys. It's going to find a base, and it's going to start going up again. It will do that. We just don't know if it's like a week, a month, 2 months, 6 months, 18 months. We just don't quite know that part yet. But we're going to learn a lot because a lot of this has to do with inflation, rate hikes, this war thing, and there's a lot of other things going on too. I'm concerned about, I personally am concerned about some economic conditions. Again, things in the economy can really, they truly move a market. Let's put it that way. They truly can move a market. So for good and bad. I like to pay attention to what's going on in our economy with like GDP and like, just a lot of different things. Like jobs is very important. So you want to keep an eye on like unemployment rates, and this inflation data is very, very important. The fund and discount rate are huge leading indicators for a stock market. Okay, so it's going to be really important to listen to what's going on. But instead of being emotional, we can be emotional later and choose our high conviction stocks. Right now, we have to be savage. We're going for the Super Bowl. You can. Back to what I was saying is timing in the market, it works either way. If you know what you're doing with timing the market, yeah, it works, okay, because I do it every day. And a lot of pro traders that I know, they do that, and, they laugh when people say that. But time in the market always works too. It just does. You just, I just can't stand going through all the downturns. I'd rather just buy in, hit it for the big gain, get out kind of, really close to the top, and then ride it down and ride it up and ride it down. Like a lot of people, they want to hold Bitcoin and they're like, hey, I made 400% on Bitcoin. That's sick. But if you know how to make 1,700% or 2,000% in the same time period, you're going to do that. And I know how to do that, so I do that. And you can't be mad at me because I want to make more money because I trade directionally. You can't be mad about it. You would do it too. You know what I mean? So, It just makes sense. So yeah, have a plan. Everything is going to come down to this Fed meeting. The market is going to move erratically and extreme on whatever happens. Okay, I personally, this is an opinion. Okay, personally, I don't think that JPOW is ever out to like hurt the markets. I don't believe that that's what he wants to do. But just understanding economics and finance and then the position that they're in, there's a lot of factors that lead me to the belief that it's probably not going to be, how do I say this to you? It's probably not going to be, even if it's gentle in its approach, it may still have quite the reaction in the stock market, and most likely probably to the downside, and people are not going to have complete comfort in going long and purchasing probably until they have an understanding of exactly how many rate hikes and exactly when, and is there going to be half point or are they going to all be quarter point? Is it going to be 5 of them? Is it going to be 4 of them? Is it going to be 3 of them? Is it going to be 2 of them? Is it going to be 6 of them? Like, we need to know what is going on. We cannot have uncertainty with this particular topic. We need to understand GDP, and we need to understand our unemployment, and we need to understand our inflation, and we need to understand these rate hikes. Okay, the market needs that. Okay, until the market gets that, the market is going to be on edge, straight up. Okay, and if you just look at the position that the Fed is in, they're in a really tight situation. Okay, it's sticky for them. They, we as a race, a human race, we got hit with a virus, a pandemic, a global pandemic. We hadn't seen one in over 100 years. So emergency actions were, in effect. Okay, stay-at-home orders, stimulus. We've expanded the M2 money supply. That created inflation. We knew it was going to happen. Well, when people stayed home and they got money, it went into the stock market, and it rallied to no end. It was like the bull market of all bull markets. It was like a dream, it was insane. And those of you who were in it know exactly what I'm talking about, man. We killed it, right? So, now we got to deal with the inflation, and one of the best ways, there's a couple ways you can have deflationary pressures, such as technology can do that, but really interest rates are the main way that governments can kind of get the genie back in the bottle. What you don't want is the genie to do one of these and be like, I ain't going back in the bottle for a decade. Okay, and you certainly don't want slowing growth in an economy and a high inflation and create stagflation. God forbid that happens, guys. I don't even want to get you guys all worked up about stagflation, but let's just we don't know if there's a recession or stagflation. We just need to pay attention to the day to day at this point. Okay, have a plan. Okay, have a plan. Be directional with what's going on, or stay out. Staying out is not a bad plan. It's actually probably top of the list plan. Honestly, this is a highly volatile, super pro level market environment. As a friend or a suggestion, guys, don't feel bad about sitting this one out. It's okay to sit this one out. Okay. Now, another thing that you could do now. Okay, when you go to school for finance and you go through stock courses and trading and all that stuff, there's out of 10 times, 9 out of 10, more like 9.5 out of 10 times, dollar cost averaging can be one of the best methods out there. There is one in particular time, that half out of the 10, that it's not really good to dollar cost average. Now, I'm going to put a caveat in there and explain why. First of all, this particular time that you don't do it is exactly right now of what's going on in the market. It's that one tiny window you're not supposed to do it. But if you're going to DCA into companies that you know for 100% sure are not going to go bankrupt if there was a 50-60% crash, like, be careful with some of the newer companies that don't have established earnings, that haven't been in business for like 100 years. You know, if you want to look at like a Home Depot would be good. You could DCA into a Microsoft, an Apple, like common sense, guys, Dow stocks, right? Those would kind of be excluded from the statement that I'm making. But what I'm saying is this. This is also a really opportunistic time to DCA into your high conviction plays that fit that criteria if it goes really bearish, because if it comes down violently and you love Microsoft and you already have Microsoft at 330, or I don't know what it's at anymore, but you know, you had it at 150 and you had it at 230 and you got it at 270 and you got it at 290, and it comes down violently back down to like 240, throw a chunk in there, throw a little brick on the fire. It's a high conviction play that's not going to go bankrupt. Therefore, it excludes the DCA exclusion model. You know, so DCA is good. It's very, very good, and it'll always pay you if you got time and patience. Okay. Me, I'm extremely technically driven, so I know exactly how to get in and get out, and with my systems and other systems too that I use mainly. But now I'm using my main system plus the system that I created with the probability, and it's just making me money basically. But yeah, so have a plan. Don't over freak out about anything in the news. It'll show up in the news. Just focus on the trend, focus on the direction, be on the small time frames. Okay, you should not be like trying to like trend trade or do any classic systems right now on like a bigger time frame. You're just gonna get stopped out, whipsawed. You know, the direction's gonna change 5 times a day on you. It's way too erratic. But on the minutes, you just flow. Go watch my video yesterday. I just opened a little example trade for you guys on Bitcoin, I think it was, and I walked you through it, and it went all the way down $3,000 in the first couple minutes, and then I was walking you through it, and it came all the way back, and it actually went green to 1,300, and I closed out the trade, doing one of those systems that I talk about. So, you know, and I do that all day long, up and down and up and down. Actually, one of the girls in the Discord, she just hit me up. She's like, "Man, I was just watching your trades and had it up on TradingView when you were doing it. That's interesting. That's crazy how you're doing that." And I was like, "Look, it's exactly what I teach you. You know, that you just go in here, you get out there, you go short there, you buy there. You know, that's how you do it. You use this as your, you know, let it guide you and trust it, and it'll make you money. Even if it goes up and you lose some gains and you go negative, it'll as long as these certain things are still there, you're good to go." For the most part, most of the time, right? 7, 8 out of 10 times. So, yeah, it's okay. I know this is the third time I've tried to say this to you, and I haven't got it out yet. But as far as timing the market and timing the market, you know, those people will always say things like, you know, if you missed the biggest day in the market, your portfolio got hit and you missed out. Well, in a way, that's true. Okay, I would agree with those guys, and I would agree with the time in the market, and I don't agree with the timing the market because I do it. But I also think that, you know, I have a lot of experience. I'm very advanced, and you know, I do this a lot. So I'm sure it's, you know, I might make it sound easy and make it look easy, but maybe it's not as easy for everybody. I do get that. But so as far as this thing, timing the market, not timing the market, this is a good time to use it to your advantage. If it goes super bullish, you know, throw money in there to make money. If it goes super bearish, throw money in there to go down and make money. Just like if you miss the biggest days in the stock market, well, what you're not thinking about most likely, because people aren't talking about this, is these are also the biggest days in the stock market, even if they go down, especially for a directional trader. So if this thing tanks and craters, that's one of the biggest days in the stock market for me. I'm going to run it, and I'm going to run it down to the ground. And then when it bases, I'm going to get out. And when it goes up, I'm going to run it up to the sky, to the moon. I'm going to hit it both ways, non-emotionally. So use this day to your advantage to have one of the biggest days. And that's what I was getting at the beginning of this video. I've been through a lot of these. And back in August and September, I started noticing like it was very extreme. Well, I started realizing that if you play this right and you have a plan, bearish and bullish, if you have a plan on these days show up once a month, and you could have 12 of the biggest days and know the future of when the 12 biggest days of the year could be. Now, there will be other ones that are monstrous along the way, but these ones are almost like seeing the future. So I'm going to end it there. You already know I love you. Welcome to the wheelhouse.